Happy New Year and welcome to another S&P 500 analysis. Today is January the 1st, 2022. The S&P 500 made new high 1 out of every 4 trading sessions in 2021. It made new highs 70 times and it gained 27% for the year. Will we see comparable performance from the S&P 500 for the year 2022? In this video, we will look at the indexes, the internals, and see what are the possibilities for a repeat performance in 2022. Stay tuned. Let me first remind yourself some of the catalysts for 2022. Here are the ones that I will be focusing on. First and foremost is the Fed tapering. Second is the escalation on inflation. Third is the rate hike. And here's a black swan that could stick out its ugly head. Stagflation. We will talk about each one of these catalysts in this video. But before we do that, let's take a look at the S&P 500. On this monthly chart, we see the S&P 500 made new high every month of last year. Only 3 losing months: January, September, and November. Rest of the month ended with a gain. And there were 7 consecutive months ended with a gain. And it ended the year with a bullish outside monthly candle. Now switching to this weekly chart of the S&P 500, ever since it made a new high in November, it's been chopping within this 200-point range, trying to break above the all-time high. In the last week of the year, it finally broke through and moved above 4,800 and put in a new all-time high at 4,808.93 and ended with a new all-time weekly closing high at 4,766.18, slightly under 4,800. For the week, it had a range of 74.94 points and ended the week with a gain of 40.39 points or 0.85%. Now, as far as the trend is concerned on a weekly basis, it is still in an uptrend. Now, let's run down the sentiment and the internal before we discuss those catalysts. On this sentiment chart, we see the VIX is still under 20, and that indicates the market participants are not fearful. And on the put-call ratio, it's been hovering in the region between 0.6 and 0.5. And that is telling us the market participants are still putting on risk. So until market participants get spooked by some surprise downside volatility, do not expect too much change from these sentiment indicators. For the last couple days of the year, the up-down volume ratio was kind of mixed, but we did notice the positive divergence from the daily advanced decline. For the last 3 trading sessions of the year, there were more advancing stocks than declining stocks, and that indicates more stocks are ending the year on a positive note. And for the last week of the year, there were more stocks made 52-week high than 52-week low. The positive sign is the contraction on the number of new low. Here on the New York Stock Exchange cumulative AD line, we are seeing a positive diversion on the short term. If this keeps up, we might see the intermediate term negative diversion get resolved. Now for the Nasdaq, there was a positive divergence from the up-down volume and the daily advanced decline on Thursday. Other than that, we are not noticing much strength from these 2 internals. And the new high versus new low has not changed. Number of stocks making new 52-week low continue to outnumber the number of stocks making 52-week highs. Unlike the New York Stock Exchange cumulative AD line, the Nasdaq cumulative AD line is still trending down. So from the internals and the sentiment, we are noticing the internals for the New York Stock Exchange is holding up better than the Nasdaq. And that could due to some rotation toward the value stocks in the New York Stock Exchange and the weakness in the tech stocks in the Nasdaq market. And this rotation will likely continue in the near term as the Fed start the tapering. When the liquidity is being reduced, the appetite to chase after the growth and speculative stock will be reduced, and more money will flow toward the value stock for a more defensive position. So keep an eye on the recent high flyer from the tech sector to pull back, and watch the more defensive stock from the consumer staples, healthcare, and utility sector for a more favorable move. Now let's take a look at the price action, starting with this daily chart of the S&P 500. As you can see on Thursday, the S&P 500 put in a new all-time high, but it did not close with a new all-time high. It closed with a new all-time closing high on Wednesday. See, on Thursday and Friday, it sort of pulled back here. So right now, let's go and take a look at the potential upside scenario. First of all, we are still looking for this high to get taken out. So in other words, we are still looking for the S&P 500 to make a new high. And I will tell you why later on this video. So if it does, then we're still looking for a potential upside target somewhere around up at this 127 extension, somewhere up at the 4867 area. Okay, so and that would be pretty much in confluence with this upper channel trend line. So that's the upside scenario. And then for the downside, we'll basically come back down and test this high here, somewhere around 4745.83. So that would be the downside. Check here to see where we get a bounce back up. Now, with the negative bias right now, I'm basically looking for this thing to actually break below this high here and come down, possibly fill this gap here. It might even work all the way back down to this 4545.85. In other words, to come down and check this pivot high, this prior high here. Okay, so that's basically what I'm looking at, and also in confluence with this particular trend line here. So those are the downside and the upside scenario for the S&P 500. And for the Nasdaq 100 on this daily chart here, as you can see, that the Nasdaq 100 did not put in a new all-time high, and neither did it close with a new all-time closing high. This closing high is actually lower than this closing high here. So this is still the all-time closing high. So once again, if it's on the upside, then I expect it to come back up and take out this all-time high somewhere around 16,744.91. So that would be the possible potential upside scenario. But again, I'm basically looking for some sort of a pullback in the early part of January, and I expect to see something coming down here and actually come down and test this 15,701 to see would it get a bounce here. And if it doesn't, then I expect it to come back down to test this 382 somewhere around 15,345. And that would be also in sort of confluence with this particular trend line here. So those are the upside and downside scenario for the Nasdaq 100. And here looking at the Russell 2000, you see that the Russell 2000 is still trying to get back up above this pivot high. And if it does, then I'd be looking for a potential move up at this 2318. And if it doesn't, and it come back down, then I look for a test of support here at 2195. And if it failed to get a bounce there, then I'm basically looking for a retracement once again back down to this lower edge of this balance area here, somewhere around 2135. And if it breaks that, then I'd be looking for this thing to do a 1x extension, this range extension down to 1935. So the upside scenario is get back up to this upper edge of this balance area at 2318, or come back down to these 2134. And for the Dow Jones Transportation, as you can see, it seems to be forming some sort of a double bottom here. And if it get above this pivot, then it stand a chance of coming back up and take out this all-time closing high at 17,039. But if it unable to get up to that pivot, then we're basically looking for this thing to come back down. And I'm still looking at a downside of 15,346. And for the Dow Jones Industrial, as you can see on Wednesday, actually closed with a new all-time closing high. And then on Thursday, it put in a new all-time high. So on Friday, it kind of pulled back into this channel here. So for the upside, if it continues to get a bounce back up, then I'd be looking for a possible target of somewhere around this 37,786, which is a 2x of this range extension here. And on the downside, if it come back in and continue to move down, then essentially I'm looking for the first test of support at this 35,625, essentially this pivot high. And if it doesn't bounce back up, then I'm looking at this range upper edge here, somewhere near this 35,150. And once again, if it get back into that range, then I'll be looking for a retracement all the way back to the other end at the lower edge of this balance area here, which would be somewhere around 33,800. So those are the upside and downside scenario. And for the broad market index, the New York Stock Exchange Composite, you can see that it tried to come up, but still a little bit distant away from the all-time high. So unless it could come up and take out this all-time high, I'm looking for this thing to come back down and possibly retest this 16,708. So the upside scenario is the all-time high, and the downside scenario is essentially move back down to this upper edge of this balance area here at 16,708. Now let's take a look at this SPY, the ETF for the S&P 500. See this little balance area here. Right now it's sort of broken down from this balance area. So I expect a little bit more downside in the coming week. And the first level that I'll be keeping an eye on is this 472.87. Then if that doesn't hold, then I'm looking at this right here at this composite value area high level here, somewhere around this 470.65. So this is the another level here. It's also a little bit of a low volume zone. And if it get into this composite value area, then the another level that I'll be looking at will be this composite point of control, somewhere around 450, 468. And then this high volume zone here, somewhere around 466. So those are some of the potential downside to keep an eye on. But if it come back up and retrace this range here, then we're basically looking for a new all-time high, and the minimum is somewhere above this 480. That's basically what I'm looking at. And here's the QQQ, the ETF for the Nasdaq 100. You can see it kind of pulling back to these high volume zone here, this high volume no. So what I expect after breaking out of this balance, looking for the possibility to come back down to this somewhere around this 395 area, and then see what it get a little chop. And essentially I'm looking for this thing to come down into this value area here, and it might possibly even move all the way down here to this composite point of control somewhere around 365. But again, I'd be focusing on these high volume node here and all these low volume zone for potential bounce and rejection, and the high volume area will be the target area. I am looking for a little bit more downside in the coming week. So the first level that I'll be looking at the downside is somewhere around this 395 and the 387.5. And the upside scenario coming back up, 401, and then possibly get up to the new high here, basically back to the high up at this level here, which would be 408.71. And for the Russell 2000 ETF, the IWM, looking at this composite point of control at 221, somewhere around that 221.75 area. Look for it to come down here to see would it be able to get a bounce back up toward this composite value area high at 226.20. And if it doesn't get a bounce, then I'm essentially looking for this thing to come down to this 215, 214.45 area, essentially near this composite value area low, and also this little bit of a balance area here. That's for the IWM. And here looking at the 10-year yield, you see that it's still kind of hovering below this 1.529 level here, 1.53. I'm still looking for the 10-year yield to come up and get up to this 17 and possibly come up and test this high here at this 1.765 level. So keeping an eye on the yield, I'm still expecting it to continue to move up. And look at the US dollar, you see that it came up close to this 97 and it kind of got rejected back down. Right now it's testing this 95.7. So we'll see will it come back in and move itself back toward this 94, or will bounce back up and come up to this 97.79 level here at this upper edge of this zone here. So keep an eye on the dollar to see which way you're going to break. Will it get a bounce back up and move toward this upper edge, or break down and come back in to this zone here? And last week we also saw the crude oil kind of got a little bounce and came up to this 76.98, this $77 level, and it got rejected back down. So right now it's still sitting at this zone here. So we're going to see would it be able to come back up and get above this 77 level and work toward the 84.94 or the $85 level. Or would it come back down once again and retest this $70 level here? My bias is I think the oil is going to go and take out this 77 level and push up a little bit further up. And again, I wouldn't be surprised that we're going to see this 90. And here looking at silver, remember I was saying that from the last video that I'm getting a little bit bullish on silver. So by the way, I do have a long position on the SLV, okay, the silver ETF. So right now we're essentially looking for this thing to see would it be able to hold above this 2272 area and bounce up here to this 2471, and we'll take it from there to see would it be able to break out of this balance area and work itself up to the 2667 and then toward this 2843, which would be somewhere around this 1x extension here. Okay, so basically that's why I'm looking at silver to see would it be able to continue to get a bounce up for this 2470 area. Now, if it breaks and come back below this 2272 and take out this low, then I expect it to possibly retrace back down to this 1960 level. And for gold, remember last time I also said that I'm a little bit bullish on gold now, but I do not have a position on it. I still do not have a position on gold. You can see this thing is trying to bounce away from the 1804 level now. So I wouldn't be surprised to see this 1846 sometime to get tagged next week sometime. So we'll see. Right now, gold is showing a little bit of a bullish sign here. And if we could take out this trend line, I wouldn't be surprised that we'll see this 1923 get tested. Last year was an extraordinary year for the market, and it will definitely be hard to repeat. Whether it will or not, the E-mini SP500 future, the ES, is still telling us to be on the lookout for a new all-time high. And the reason is due to this poor high from December 30th. For those that have not been following this channel or unfamiliar with the S&P 500 futures, let me just say this. In the last year or more, we have seen these poor highs and Globex all-time high, telling us to look for a new high, and its track record has been perfect so far. Now, I'm not saying that it can't be wrong, because nothing is infallible, but the probability is high that we will likely see a new high for the ES, and that implies the S&P 500 will also see a new high. So maybe we won't see a new high in the first week of the year or the first month of the year, but one must be aware of the fact that there is this poor high waiting to get tagged. With that said, here's what I'm expecting for the short term. I'm looking for the ES to break below this balance area and work its way down to clean up all these poor structures as the market is starting to focus on the Fed tapering and the persistent on inflation. After these poor structures have been resolved and Q4 earnings season start, with company executive putting up rosy forward guidance to help pump back up their stock price, we'll likely see a bounce back up and take out this poor high here, and that will put in a new all-time high. Then reality will set back in, inflation continue to go up, and Fed is sounding a bit more nervous now and start hinting on a much more earlier start on rate hike and likely more than 325 basis points in 2023. And that could stop the music, and we will see everyone trying to exit at the same time. And that is only my expectation, not necessarily what is going to happen. What do you think might happen in 2022? Post your expectation in the comment section below. Before I end this video, I'd like to thank you for helping me grow my channel in 2021. And I am looking forward to grow it even more in 2022. I will expand my coverage on trade setup and trade analysis in the coming new year. Hopefully you will find them educational, and if you have any suggestion on what you'd like to see me cover, post them in the comment section below. But I do have one request. Please do not post requests on trade, because the intent for this channel is educational, not advisory. I believe in the philosophy of feed a man some fish and he won't be hungry for a day. Teach a man how to fish and he won't go hungry for life. So by learning how to set up a trade will be much more beneficial than for someone to tell you what to trade. And that's my intent on showing you my process on establishing possible scenario and setting up a trade for those possible scenario. So until next time, be sure to smash that thumbs up, to give it a like to help me get YouTube to promote and share this video. Thank you for watching and stay safe.